Hey there, good afternoon. I'm Heather Sullivan. Thanks so much for joining us here on Sullivan Smart Sense. We're going to talk about everybody's favorite topic today, but we're going to make it easy. We're going to talk about taxes because tax time is just around the corner. But there's a bunch of stuff that you can be doing now in the month of December before the end of the year that can help to reduce your tax bill and just get ready for tax season so that you're a little happier about it, maybe. But anyway, so I've got one of my favorite experts joining me today, Ed Gardner, certified public accountant. Thanks so much for being with us, Ed. We appreciate it.
Glad to be with you.
What is your life like tax season versus non-tax season? Are you like Jekyll and Hyde, two totally different people?
Well, during tax season, my hair stands up. Outside of tax season, my wife actually gets to see me.
Yeah. I bet she likes that. I bet she does. Well, thanks so much. I'm glad we got to get some time with you before things get really crazy. So December is really the month for people to kind of start looking at some things they can do and get organized too, to prepare for tax season rather than kind of being caught off guard. So what do you think is the most important thing or things that people should be doing right now?
Well, they might, one, start gathering their tax information instead of waiting to April 14th to add everything up, to start adding up different things to see what their income is and what their expenses are. And of course, you might want to gather a copy of your 21 tax return to kind of have a checklist of things that you'll include in your tax return for 22.
I had even read in an article, and I wanted to ask you about this, that it recommended talking to your tax professional like during this time period. But I mean, I'm sure you don't want every client you've ever had calling you in the month of December. Is that really more of like if you've had kind of a different year, some different things going on, or is it good to put that call in and check in?
Well, it's good to check in to see if your tax preparer knows about your background, your history, to go over different things. And of course, if you have changes, big sales during the year, there are a few things you could do before year end.
Okay. And letting our viewers know, by the way, if you have any tax questions, this is your time to ask. We've got the pro here. So just go ahead and write those in the comments and we'll see what we can do to get your questions answered. So keep those coming. Okay. So the first thing, I think the thing that people think about is a charitable contribution. What can they do between now and the end of the year? Does it absolutely have to be by the end of the year? And what's the is there still that limit on it?
Well, first of all, you need to see if you're going to have enough to itemize deductions. And if you do, then you might look at accelerating some of your charitable contributions. In fact, people who have to take what are called RMDs, required minimum distributions, they do have the ability up to 100,000 to actually contact their trustee and tell them to make a charitable contribution instead of receiving their RMD. So especially people who don't itemize, that will actually lower their adjusted gross income and also lower their taxable income.
Yeah. So the past couple of years, it's been that if you're going to use the standard deduction, then you can deduct up to 300 of a charitable contribution in addition to the standard. Is that still the way that works?
Well, actually, it was up to 600 for a married couple in 21, but Congress did not extend that. So you don't get the extra 300 for single or 600 for married.
Oh, okay. So that is a change this year. That's good.
That is a change. Yes.
Okay. All right. Okay. So let's talk about deferring your income. And I think probably people may not even realize how to do that because they're just, on a standard paycheck or what have you. But if you're going to look at trying to defer income, how does that work?
Well, first of all, if someone has a business and they're self-employed, they might consider maybe not sending out that last bill before the end of this year. If they had a really good year during 22 and they don't think 23 will be as good. And then also in the way of expenses, if someone's self-employed, maybe there's some expenses that you would pay the very beginning of 23, like rent, that you can actually go ahead and pay toward the end of this year. Okay. And then also if there's some equipment that you need, you might look at possibly getting that. If you were going to get that in January or February next year, go ahead and get it before the end of this year. Of course, it has to be placed in service to be able to write that off.
Okay. Let's talk about what are some of the tax deductions, things that people can be doing that might be tax deductions that they can pay attention to.
All right. One thing, let's say that you're able to itemize deductions, you might look at what you think your adjusted gross income will be this year. And if your medical expenses are below 7.5%, and let's just say hypothetically, Heather, someone makes 100,000 for the year. So 7.5% would be 7,500. So if their medical bills are going to be below that, they might defer paying the medical bills into January. However, if they had a year where there were a lot of medical bills and they have medical bills to pay before the end of this month and it's above 7.5%, you might go ahead and pay those before the end of December. For people that have property tax, with sales tax and property tax, you're only allowed to deduct up to 10,000. So if you itemize deductions, don't forget maybe the sales tax on purchasing a car or a large purchase. That could be an extra deduction. But if you're going to be below not eligible to deduct standard deduction this year, that's what you're taking, and you won't itemize, you might look at delaying paying your property tax until January. Someone has up to January 31st, 2023 to pay their property tax, not be charged extra. And then that way next year you might have 2 years in 1 year, which I called bunching. And then, of course, on charitable contributions, if you're going to have enough to itemize this year, you might consider maybe what you were thinking of giving in January or February, go ahead and pay it now in December so that you're able to deduct that under the current tax year. Okay. Another thing that people might think about is maybe energy improvements. You haven't done that in the past. Mm-hmm. So you might have windows, doors, insulation, new air conditioner or heater, and you could get a potential tax credit on your tax return for 2022 by going ahead and incur that expense during this year.
Okay. We've got some new viewers joining in the conversation as we're going along. So again, to anyone just joining us, if you have a tax question, this is a great time to get your tax question answered. So just write those down in the comments and we'll get that answered for you. Let's talk about loss harvesting. Okay. What is loss? Yeah. What is loss harvesting and how can that help?
Well, I jokingly say gardening for the gardener is that maybe you should add up your capital gains and your losses for the year. And of course, individuals that get dividends, there are what known as capital gain dividends. And you might want to check with the places where you've invested to see if they haven't already posted it, what they will be this year. And if you have net positive capital gains this year, you might look at stocks that you have that maybe have lost money. You don't think that they're going to go back up. So you might consider selling those stocks before the end of this year. And that way those losses, Heather, would offset the gains you have. But something real important is that if you say, well, I think the stock might go back up, you have to wait more than 30 days before you buy it again. Otherwise, it's called a wash sale, and you can't take that loss against your gains this year.
Okay, that's good to know. Let's talk about maximizing your retirement contributions. Can you go over the limits and talk a little bit about how that can help?
Well, of course, you have limits that you have to look at if you're in a 401k, 403b, something like that at work, and a spouse is taking that, you may not be able to also deduct an IRA. And so there's different limits for single and also for married. So you might look also with your employer if you haven't maximized your 401k for the year, or that you might look at possibly going ahead and see if you can add additional funds to that. That way that would lower your taxable income for the year. And remember, for example, for every dollar you contribute, and let's say, Heather, hypothetically, you're in the 24% tax bracket, that when you put $1 into a retirement account, you really effectively didn't put in $1, you put in 76 cents. 24 cents came from tax savings if you were in the 24% bracket. Mm-hmm. So basically, you're almost making almost a 33% return on the investment if you were in that 24% bracket.
Wow. Okay. Now, let's say you've given the max to your 401k. Then can you also do the IRA contribution in addition to that if you're trying to, maybe lower your income?
Again, if you're above the threshold, because if you're in your retirement account at work, you can't do it for an individual. It's almost like the old roller coaster at Astroworld. The more money we make, it limits what we can deduct to an IRA in addition to a 401k. So someone can do what's called a non-deductible IRA contribution. You can't deduct it now, but the money grows tax deferred, and then of course you can take it out later, and that would be taxable, the portion that it grew during the years.
Okay. We got a viewer from, I got a question from a viewer, Johnny. He's asking, is there any way I can incorporate paying child support when filling in his income tax? What do you think about that?
Unfortunately, Johnny, child support is not a tax deduction. And you won't be able to deduct that on your tax return. And of course, the person receiving the child support, that's not income to them either.
Okay. So hopefully that answers your question for you, Johnny. Thanks for the question. Anybody else out there have a question, please be sure and send it on in while we've got Ed with us. Let's talk about flex spending accounts, because this is the use it or lose it kind of account.
So you have someone, for example, that can get up to $5,000 for childcare. And then maybe because of the virus and that, you might have kept your child at home. So there's a use it or lose it rule. So in that case, if you incurred the expenses and you don't get asked for the reimbursement, then that you don't get that money back from your employer. Likewise, if you don't spend enough and you said you spent $4,500 and you asked them to take out the $5,000, the employer can't give you that $500, and you actually lost that money.
Okay. What are the common issues people come to you? What are the sort of the common mistakes maybe people make, or common issues people have when they come to you that maybe we can, help people sort of answer some of those questions before they?
Well, one of the biggest common mistakes is, of course, when they add stuff up, they transpose numbers.
Yeah.
So they want to double check their math. And then also, like I said earlier today, is that you need to review the previous year's tax return, because maybe they forget to include items on their tax return. Maybe they had an account at ABC Bank and they changed to XYZ Bank, and they earned interest during the year, and then they didn't include that. And then a year and a half from now, IRS comes back and say that you didn't include that on your return, that you underpaid your taxes, and you not only owe us taxes, but you owe us interest and penalty on the amount that you still owe us.
You mentioned at the top of our discussion about the $300 deduction for charitable donations wasn't continued. Are there any other changes this year that we need to be aware of?
Well, that was really the biggest change for the average individual. I mean, when you start getting into wealthier people, there can be additional changes.
Okay. You're saying I don't make enough money to care? Is that what you're saying? Don't you worry about it, Heather. All right. Well, when should people from a Consumer Reporter perspective, we encourage people to file early or as early as they can. Not only does it help them get their tax refunds sooner, but it also can help to protect them from identity theft, someone else taking out their. But what's your advice to someone in terms of, if they are working with a tax professional, or just, getting their taxes done? What's your advice in terms of, trying to get it done? How quickly should they be getting it done? How do you sort of set people off on the right path?
Well, first of all, IRS every year in November shuts electronic filing down, and they don't let us know until sometime in January when you can start e-filing returns again, especially for the 2022 tax year. Now, I do recommend that people consider e-filing, because IRS furloughed almost 40% of their workforce in March of 20, and they're still short of people. And unfortunately, when people have paper filed, and what that means, Heather, is that you mail it in, that tax return in correspondence could be sitting on a desk and no one's processed it yet. And of course, when you e-file the return, then there's your information has gone to the IRS, and they can send you a confirmation they've received it. Likewise, if you do get a refund, I recommend that you consider having that direct deposited to your bank account. But something really important, you want to double and triple check your routing number to make sure that you listed that correctly on your tax return, your e-filing. and also your account number to make sure that you've done that right. Because if you transpose numbers and you don't put the right numbers, it's not going to go to your account. It's going to go somewhere else, and it may take forever to get your refund back.
What has your experience been lately? I remember in 2020, so many people needed to talk to the IRS about getting their refunds, getting the stimulus checks. And there was a smaller staff, they were working from home. Is it better now? Are you experiencing better responses from the IRS now, or should people be prepared for delays, do you think?
Well, IRS is still very slow at responding. In fact, there's not numbers lately, but only about 10-15% of calls actually are being answered.
Mm-hmm.
Now, IRS, in their big hiring that they're doing, they have over 4,000 people that they have hired to answer the telephones. Of course, there's a training curve. Now, if you do call the IRS, I recommend that you consider calling between 10 in the morning to 11:30 in the morning and 2 to 2:30 in the afternoon, because a lot of people will sit on hold, but unfortunately, a lot of people, because of their short staff and telephone response, they've actually sat on hold for a long time and they get kicked off after a while.
Oh.
Yes, I've had a lot of people tell me about that.
Oh, interesting. Okay. Well, that's a good tip, though. Hey, we got another question from a viewer. Tyler writes in and says, what is the best way to handle customer trips or entertainment for your personal business? Can those expenses be considered marketing?
Okay. Well, entertainment has to be, typically they want to only deduct it with meals. They've said that, like sporting events, the Texans, the Astros, that those aren't deducted. And of course, when you have entertainment, you want to remember the 5 W's: who, what, where, when, why. So for example, who might be ABC person at XYZ company. What is how much? Where, you went to a particular restaurant. When, the date. Why, potential client referral source discussing EFG contract. And understand too that we're in the Fifth Circuit, we're in the Houston District, and IRS likes receipts, not just your Visa, MasterCard, American Express. And also, should someone get audited, and you could be looking up to 3 years for the average person, is they also will ask potentially look at your calendar, your appointment book. So you have to be careful also what you write in there.
Okay, that was very good information. Tyler, I hope that answers your question for you. Thanks so much for the question. We appreciate it. And those W's, by the way, are a great way to write a news story, too. That's what we do. We answer those same questions. Okay, I think we've covered it. Is there anything else that you want to add?
Just take your time in preparing your return. Work on it early. Don't wait till the last minute. Because I have found a lot of people that wait till the last minute, they rush through stuff, they forget deductions that you're eligible for. In fact, I just looked at a couple today that had filed the last day and they did their own return, and they missed a lot of things that actually they had information, but they were rushing, and so they forgot to include them in their return.
Yeah. Yeah, I was trying, just kind of maybe even work on it a little bit over time, but trying to, tackle it. It just seems overwhelming, and then you never want to do it. So.
Because then you get a receipt that you had several months ago and you don't remember what it's for. That's another problem that a lot of people have.
Yeah. Okay. Ed Gardner, thanks so much for being with us and sharing your insights with us. It's always so great to talk to you, and you always make tax time seem so easy.
Thank you. And I always like to end with 3 words, and that's many happy returns.
So. Many happy returns. I like that. Well, thank you so much. We really appreciate it. I'm sure I'll be talking to you again soon, and have a good holiday season.
You too.
And thank you so much for joining us today. We appreciate you being with us. If you have any other questions or topics that you'd like to see us cover here on Sullivan Smart Sense, just send me a note on Facebook or here at the station, and we will get an expert on to answer your questions. Thanks for being with us, and we'll see you next time.